What's considered a good deal when it comes to buying a short-term rental property? I get this question constantly, so I wanted to come on here today and chat about it a little bit and just give you my thoughts. And I get why nobody wants to make a bad investment, especially in this space where there's so much noise online. Everyone's trying to find that unicorn property that cash flows like crazy and practically runs itself. I get it. That's everybody's dream. But the truth, a good deal means something different to every investor. So in this video, I'm going to break down exactly what makes a short-term rental worth the investment, how to define your own version of a deal, and the biggest mistakes I see people make when trying to chase ROI in this space. So let's get into it. Let's start with the biggest mindset shift, because this right here is where most people get tripped up. There is no single definition of a good deal, and that's because the right property for you depends on what you're trying to get out of it. Let me give you a couple of examples. I worked with a buyer recently who wanted a short-term rental that doubled as a family getaway. They weren't trying to squeeze every last dollar out of it. Their idea of a good deal was a location they actually enjoyed visiting, enough cash flow to cover the costs, and low maintenance management because they didn't want to deal with the day-to-day. So we found a home that wasn't the highest earning property on the market, but it fit their needs perfectly. It was in a great area with steady tourism, had strong seasonal demand, and it was easy to maintain. So it was a win for them. Now let's flip that. I've also helped buyers who are laser focused on the cash flow. No emotional attachment, no plans to stay at the home. They were looking for strong occupancy, minimal downtime, and upside potential through automation and smart pricing strategies. Two totally different buyers, two totally different good deals. So if you're starting your STR journey by just scrolling Zillow and looking for the lowest price or highest gross income, you're gonna miss the mark. Before you even look at properties, ask yourself, what's the goal? Are you chasing income, lifestyle, appreciation, or a little bit of everything? How involved do you wanna be in managing it? Because your answers to those questions, that's what defines a deal for you. Now let's talk about the fantasy we've all heard. Someone finds a random listing, throws it up on Airbnb, and starts printing money overnight. It can happen, but it is definitely not typical. The reality, the best deals usually aren't obvious. They're hidden in plain sight and they require experience, speed, and strategy to recognize. Let me give you a real world example. I was helping a client look in a neighborhood that wasn't getting much attention. Nothing flashy, kind of in that in-between zone, but what I noticed was this. The city had just recently approved nearby STR-friendly zoning. The area had consistent year-round demand thanks to sports tourism and local events. The homes there had layouts that were perfect for groups, 3+ beds, open concept, and easy to theme. Most people skip right past these listings, but with the right furniture package, great guest experience, and targeted pricing, that property turned out to be one of their best performing rentals. So no, it wasn't sitting there labeled as great investment opportunity, but it was a deal because we knew what to look for. So this is where working with someone who actually knows the market matters. Not just the real estate side, but what's trending with travelers, how regulations are shifting, and what guests are paying top dollar for. If you're just relying on public listings or waiting for someone to scream, deal, you're gonna miss out. Good deals aren't loud. You need sharp eyes and local insight to spot them. Now, let's say you do find a great property, the numbers work, the comps check out, the location makes sense, but then it tanks. And you're sitting there wondering, what went wrong? 9 times out of 10, it comes down to one thing, management. I cannot stress this enough. Management will make or break your ROI. I've seen beautifully designed homes underperform because the hosts didn't have systems in place. Messaging was slow, cleanings weren't consistent, pricing didn't adjust to market trends. It doesn't matter how nice the property is, if you're not running it like a business, it won't perform like one. On the flip side, I've helped clients manage very average homes that crushed it because we dialed in every piece of the guest experience. Automated messaging, pro cleaning teams, smart pricing tools, clear, simple check-in instructions, and fast response times. This business is about creating trust and delivering a seamless stay. You could have a 5-bedroom stunner, but if you're slow to reply or guests feel like they're figuring things out on their own, you'll get bad reviews. And in this game, that will kill your momentum fast. So please don't think the deal ends at closing. That is just the beginning. The real win is how you operate. And if you're thinking, okay, but I don't have time for all of that, that's where someone like me comes in. I help STR owners set up their systems, manage the day-to-day, and make sure their properties perform without them having to babysit it. Now let's talk strategy for a second. This is where I see a lot of people get overwhelmed because there are so many different ways to invest in STRs. You've got volume-based investors with 10 plus listings. You've got luxury STRs doing high-end, low turnover business. You've got hybrid models where people use the home part of the year and rent it out the rest. Every single one of these models can work. The mistake is trying to chase all of them at once. If you're trying to build a portfolio, your decisions are going to look a lot different than someone who just wants one STR that cash flows and gives their family a vacation spot. And when you don't get clear on your strategy from the beginning, every property will make you feel like a maybe, and you'll second guess everything. So get laser focused. What are you building here? A brand, a side hustle, a stepping stone to other investments? Define the lane you're in and stop trying to follow someone else's GPS. And finally, I want to say this for the people who have been sitting on the fence. Stop overthinking it. You do not have to know everything to take the first step. I'm not saying be reckless, but at some point, the research becomes resistance. You're not going to learn how to manage an STR by watching YouTube videos all day long. You learn by doing. Buy the property, set it up, make mistakes, adjust, repeat. You don't have to be an expert to start, but you do have to start to become one. And if you're feeling like, I don't even know where to begin, that's where I come in. So here's the deal. I'm not a guru. I'm not an influencer with a massive Airbnb portfolio. I'm a realtor with 20 years of experience in real estate, and I've spent my career helping people make smart, strategic decisions with properties. Now I've taken everything I know, how to analyze a market, how to negotiate a deal, how to spot values others miss, and I've started applying it to the STR world. I help buyers find properties that make sense for them, and I help owners manage those properties so they actually perform. So if you're thinking about getting into the short-term rentals here in Phoenix area, or you already own one, but you want to hand off the day-to-day, reach out. You can DM me on Instagram at Stacy_sells_AZ or email me at realtorstacie@stacymoeller.com. And if you found this video helpful, give it a thumbs up, subscribe for more STR content, and drop a comment if there's a topic you want me to cover. Thanks for hanging out with me today, and I'll see you on the next one.